right, guys, we're back again with another great episode of PFREI, a passion for real estate investments. I'm your host, Fuquan Bilal. We have Stephanie Walter from Erne Wealth. Welcome to the show, Stephanie. I really appreciate you taking the time out to come on my show, my podcast.
Thank you very much for having me.
Awesome. So let's get the guests familiar. Sorry, the guests. Let's get the audience familiar with our guests and tell us a little bit about your background. How did you actually, your personal story, if you will, and then we'll jump into the interview.
Sure, yeah. Well, let's see. I jumped out of the W-2 world in 2005 to become an insurance agent, and always loved real estate. So I happened to live in Colorado, so I kind of had a thing where I wanted to buy, a single family home like every year. And so I was on track and doing that. And then in about 2016, I sort of became interested in learning more about, the syndicated world and kind of scaling up a bit. And so I signed up, got some training from RE Mentor is the name of the group, and completed our first syndication in 2016, and then just loved it. Loved the idea, loved the concept of bringing a lot of people together to do something that no one of them could do by themselves. So I became pretty passionate about raising money because that was really, I think, the closest to kind of what I do in the insurance world or being a business owner. I really related a lot to raising money. And so by doing that, I work with a lot of very wealthy people. And I learned a lot from them, probably learned more from them than they learned from me. And just kind of from there, just had a mindset switch and moved a lot of my money from my single family homes into syndications that were performing well, and just getting ready to sell my agency at the end of this month. And I can, quote unquote, retire. I don't think I ever will, but I can do this full time, which is what I love.
That's awesome. This is a great story. Why are you passionate for real estate investing?
I love it because um, I understand it. I think that's the biggest thing. You have a piece of property, and, you understand that it always has value, if you purchase it in a certain place. I think I don't think there is a better tool out there to make people wealthy than real
Not
estate.
Bitcoin? You know, like Bitcoin? Just
I don't know.
kidding.
That goes under the category of not understanding. So I stay away
That
from
and
it.
stocks. I don't know if you invest in stocks, but
But
I mean, shout out to anybody who invests in stocks. I mean, if it's making you return and it don't keep you up at night, I guess is good, right?
yeah, exactly, exactly. So no, I think it's the by far what the wealthy people have in their portfolio the most is real
Real
estate.
estate. Yeah.
That and business, like ownership in businesses.
Now, what type of syndications are you doing? Multi-family syndications. Let's talk about that a little bit. Is that more of the commercial, big apartment building syndications you're
Yep.
doing? Okay.
We do that. We've done retail actually. We've done right now we're doing a development deal. Everything is pretty located in Florida. That's really our sweet spot. That's where we like to look.
Hmm.
But yeah, those all commercial. But yeah, multifamily, the majority of it, then retail, then the development is very small amount of what we do.
That's awesome. Yeah, talking about that is this is a great topic because I think that a lot of people don't really understand the syndication piece. You talked about a little early on that you were very passionate for raising money. You learn a lot from wealthy people because you have to be in those circles in order to develop relationships, right?
Mm-hmm.
And make it transformative instead of transactional. That's how you really connect with people. And raising money is a whole different business in itself.
Mm-hmm.
It's more relationship. And what I've learned over the years of doing that is, of course, doing what you say and being having transparency, being accountable, and also showing your performance of what you can do. What are some of the things that you feel as a syndicator was a hurdle you had to overcome? Because I'm pretty sure you have frustrating moments like, oh, does this thing really work? People just make it seem easy. I'm going to get a building. I'm going to create a PPM. I'm going to raise money, and it's not that simple. What is
No.
some? Let's talk about some of the challenges that you go through
Oh
as a
gosh.
syndicator.
Well, I'd say the first one is I tend to be probably like a lot of entrepreneurs and want to do everything myself.
Mm.
And that was a mistake that I did in my first syndicated deal. I did everything. It was just me. So I did everything from finding the deal to getting the financing to, all the due diligence to raising the money. And now I'm managing the property. So I'm that by doing it that way, and it was, it ended up being a good investment and my investors are happy. But what I learned is I don't like doing that.
So it's more of who, not how scenario, right?
Exactly. Yep, that's exactly it. And so I realized that I should just focus on what I like to do, which is for me is raising money, and let everybody else do what they're good at and actually work as a team. And that way, we're on our, I think, sixth or seventh deal right now, and I could have never done that, by myself. There's no way. So, finding a good team of people is crucial in this. Don't try to go it alone. I think, like I said, a lot of entrepreneurs make that mistake because we're like the lone wolves out, running our businesses, and we think we can do it all by ourselves, but it's not very practical to do the syndications that way.
Yeah, leveraging human capital is it's a really main component in doing these syndications, especially if you're doing large syndications. You need people for the finance piece to help you with that. The bigger the deals get, the more people have to go on the paperwork, to the lenders. Just all of the different things that goes with it. It's tough. I mean, I'm pretty sure somebody can build the process and do it, but they'll burn out, right?
Yes.
So focusing on the who, not the how, will help you grow. It will help you keep sanity.
Mm-hmm.
And it definitely will increase returns because you can find more deals when you learn how to leverage the human capital. So thanks for sharing that because a lot of people, put on the cape and go, oh, there's no problems. Everything is, I've learned this, I learned that. And they don't really talk about the real challenges they go through with that. So you pick Florida to be your market. Is that you're focusing on just one state and one market because you have a lot of inventory that you can get in that area?
Well, I mean, we like Florida a lot. It just happened to be that that's where we acquired most of our properties. My one partner that I work with is there in Florida and has lived there for 35 years.
Good. Boots on the ground.
Yeah, so he knows the area really, really well. But I mean, the second reason we love it is they were fabulous during COVID, and all of our properties, knock on wood, even the retail that we purchased, we kept at over 95% collections with rent, and we continued distributions all through COVID, and that was just a blessing. That we did buy in that area. And people always do say it's important to buy in an area that's pro landlord, pro business, things like that. But until you go through like a COVID, that's when it really like clicks. Okay, no, that's really important.
Hmm.
It's really important.
Yeah, what do you think about money itself? Like when I say money, what comes to, because you teach people to unlearn most of what they've been wired to think about money, right? And you're re-educating people. and attaining wealth that can be passed into next generation. So what is, when you see the word money, you hear the word money, what comes to mind? What is money to you?
Money equates to me to freedom.
That's the
Um,
number. That's the number one answer.
oh, is
What
it?
up? What up? Yeah, everyone says freedom.
Oh, gosh, choices, control,
Mm,
things like that. I mean, not controlling other people, but being able to control your life and not
yes.
having an employer control you,
Back to the
basically.
freedom. Yeah, for
Hmm.
sure.
Yeah.
Yeah. So what are you doing now? You said you're educating the masses. How are you doing that? Is there like you do Zoom calls? I know since COVID, everybody's done a Zoom thing. Do you have like weekly sessions, monthly sessions? How does that go? How can our audience
Yeah.
find more about that?
Well, I appear on a lot of podcasts, and so I have a media page on my website. And then I was sort of getting a lot of the same questions. And I felt like there was a real need to address like some of these more common questions that new investors have. So I just created a little podcast. They're very short videos. I'm not even sure you'd call them podcasts, but they're about less than 5 minutes a piece of me answering commonly asked questions. And that's on my web, or you can get to that by going to askstephanienow.com. And that seems to be, people, like I said, they all seem to have similar questions when getting into this. They think syndication is this weird, you know, new thing, and actually it's been around for, a very long time and is utilized up till, probably 20, 30, 40 years ago by largely by banks, insurance companies, pension funds, and the very wealthy people. And so I feel like in the last few years, it really opens it up to kind of I mean, you still need to be accredited to be a part of it, but it sure opens the world up to not the multimillionaire person. And it's a great way to get passive income.
Got it. I'm going to shift a little bit to the retail because you said that you do retail as well, and I want to know, because I know some people, I know guys who raised money for retail and they had to like close shop and pay investors back because COVID just literally wiped them out. How
Mhm.
has that affected your investment strategy? Are you guys just focusing on a multifamily to that sector come back, or are you still bullish and getting retail at a bigger discount now? What's the strategy on that?
That is interesting you asked that question because I just talked to my partner today about that. And he said right now, um, multifamily is just insanely competitive right now. Like it's hard to find a good deal. And everything's cyclical, just like any real estate. But that's correct. His specialty before he got into syndicating deals was buying retail properties and kind of turning them around, sort of like a fix and flip for retails. So he said he's coming across a lot of people that are ready to sell and get out of retail, and so yeah, we are definitely looking for great opportunities in that area too.
Are you guys going to repurpose those to multifamilies? Because you see a lot of different hotels that went out of business. Guys are taking those down and repurposing them to multifamily. People are doing all types of things with the retail stuff, but you see most of the retail is anchored by a big store, like we have up here ShopRite in Florida. I think they have like a Publix or something like that, or whatever the shopping center is. Most of those are anchored by big shopping stores or banks. Um, the restaurants, forget about it. I mean, some of them survived, some of them didn't. The little
Yeah,
small mom and pop stores, it's just like desolate. I was in St. Louis for a mastermind a week ago, and the mall was just Macy's in the movie theater. Everything else was closed. I'm going, oh my God, this is like insane. But like, that's opportunity.
it
But
is.
is it okay? Everything is going virtual, Amazon and everything else in the cloud. So what are people still need to get out and shop and do stuff? They just want to do that to get out. But how are you guys looking for deals? Like, is it office space? Like, is this a weird dynamic, right? Because retail, I'm like, oh, office space is available. It's, that's easy. You don't have to deal with a tenant. You just build it out and you get 5 years of rent and you can leverage the leases and everything else. So
Hmm.
what's your take on that? I mean, it's scary.
It
To
is.
me, it's like,
Yeah, it really is because we don't really know what everything looks like, but I think what we have seen through COVID, during what we saw during COVID in our retail properties were the service oriented people, either, just as opposed to a mall. When you think of like all the shops in a mall, a service oriented, like a dry cleaners, like um, like a little restaurant, a little bar, a liquor store, even daycare and stuff like that. Did those types of service related stores do pretty well? Now COVID is a whole nother thing, but if you go to states where they were, where largely businesses were kept open, they had a little bit of a hiccup, but all of ours have done very well.
I guess I would assume those were the red states. No, I'm just kidding.
Yeah. Yeah, it might be.
Yeah, yeah. So it's weird though, but I'm glad we had a chance to discuss that because I haven't had someone on the show or interviewed someone to kind of discuss the retail part. I have a lot of multifamily syndicators, and again, I did know a gentleman who ran a fund doing retail, and they said, you know what, we're just going to liquidate and give everybody money back because it's unforeseen. There was so much talks about, especially when New York started to collapse and everybody started to move out, mass exodus, and then you see the big major companies like work from home. We're incentivize you to stay home. It's like everybody knows. I think there's always going to be an opportunity in the retail commercial space. You get
Mhm.
the discount is there now to kind of leverage it a little bit and see what's going to happen.
And that's what I think too. I do think that as well, just from what I've seen. And of all of these six, deals that we've done, that retail is returning. We're on track to return about 49% annualized return to our
Oh
investors.
wow, amazing.
So there really can be quite a good return. So don't turn your nose up at retail.
Yeah, I mean, when there's
So
blood in the
yeah.
street, you want to, the old saying, with when you can mitigate risk, look at it a little bit more because that brick and mortar will always have value. It could be repurposed to a storage facility. It could be anything, right? It could
Hmm.
be storage units.
Apartments, you
Yep.
see that. You see them building more in the parking lots. I don't know if you've seen those around too. So yeah, it's interesting, but you have to be with people, I think, that are very familiar with the area. That's pretty key. And the asset type, very familiar with that too.
Yeah, awesome. Well, thanks for coming on the show. I really appreciate it. If you guys get a chance, make sure you check out the website, erbewealth.com. That's erbewealth.com. Stephanie Walter from Irby Wealth.
Yeah.
Thanks for coming on the show. Any last words you want to leave out hold on a second, let me think of it. I'm saying guest audience. There we go.
No, I mean, I thank you for having me, and I just encourage people, to look at, alternative investments because they, they change people's lives and give you that, like I said, that passive income, which really gives you the the freedom to do, what you want to do in this life and not be tied to a boss you don't like.
Thanks for coming on the show. I really appreciate it. All right, guys, another great episode of PFREI. I'm your host, Fuquan Bilal. Be sure to check us on all social media platforms